Good morning, students. Once again, welcome to corporate accounting class. Students, today we are going to study another method on valuation of equity share is fair value of equity shares. So it is a hybrid method, combination of both intrinsic value method and yield value, yield method of valuation of equity shares. That means here, under both these two methods here, we require to calculate the value of equity share. That is, under the first method, intrinsic value method, first you require to arrive the value of equity share. Then again, under the yield method, you require to ascertain the value of equity share. And finally, you have to take the average. So, by adding the equity value of under both these methods, and thereby dividing by 2. Okay. So you are going to get the average of the value of equity share under this method. And based on this method, I want to take one problem. Already I have given you problem. Once again, I want to recall the same. That is, from the following balance sheet information, calculate the fair value of an equity share. So balance sheet is given as on 31st March 2013. In the asset side, goodwill 50,000, fixed assets 2,50,000, current assets 2 lakh. Then in the liability side, share capital 20,000 equity shares of rupees 10 each, fully paid 2 lakh. Then reserves and surplus 1,60,000. Next, current liabilities 1,40,000. Then further they have given information. Profit for the past 3 years were 2011 50,000, 2012 65,000, 2013 80,000. Apply 1, 2, 3 as weights for weighted average. And it is the policy of the company to transfer 20% of the profit to general reserve. The normal market expectations is 10%. And for the purpose of valuation of goodwill, for the purpose of valuation, goodwill is valued at rupees 70,000, fixed assets 4 lakh, current assets 1 lakh 70,000, and you require to ignore depreciation and taxation. Now, here the thing is under the first method, that is under the intrinsic value method or net asset method. Here you first require to ascertain the value of equity share. So that's the first thing we require to do here. So here you know value of equity share under intrinsic value method, that is equal to net assets available to equity shareholders divided by number of equity shares. So first here you require to ascertain the net assets available to equity shareholders. So here the information relating to the asset side and liability side. Okay, it provides you the ample opportunity to solve the problem under this method. So first I will calculate, that is first one will be, yes, first one will be calculation of net assets, calculation of net assets so like this, particulars and amount in rupees, and one by one we'll take care the item. So goodwill would take the balance sheet value. So take the information that is given in the adjustment, that is 70,000. Next, fixed assets, fixed assets. Here are fixed assets 4 lakh, 4 lakh. Then current assets 1,70,000. Current assets 1,70,000. So total of, so it becomes 6,40,000 minus current liabilities. Current liabilities 1,40,000. So net assets available to equity shareholders is 5 lakh. 5 lakh. Now, based on this information, here calculation of intrinsic value, intrinsic value of net asset method. So here value of equity share is equal to net assets available for equity shareholders, for equity shareholders divided by number of equity shares, number of equity shares. So here we are calculating, that is say net assets available for equity shareholders. So 5 lakh, 5 lakh. So divided by number of equity shares 20,000. 20,000. Then rupees 25. Rupees 25 per share is the value of equity share as per net asset method or intrinsic value method. So here the first element of this formula is intrinsic value we have calculated. Now next under yield method. Yield method, how to calculate the value. So that one also we do. Okay. So this one will be the first. Okay. Next. In the second step, we try to solve the problem under yield method. Yes. So yield method. Here, the first one is calculation. Okay, I will consider this one will be the second step. Calculation of average profit. Average profit. So for which we make forms like this. Here, next profit. Next, weight. Next one is total profit. Total profit. Yes, 2011, 2012, and 2013. So profits given. So 2011, 50,000, and 2012, 65,000. Next, 2013. So it was 80,000. Okay. Weight 1, 2, 3. So 50,000 into 1, 50,000. Then 65,000 into 2, 1 lakh 30,000. Next, 80,000 into 3. So 2 lakh 40,000. So total. So total of the weight is 6. Then total of profit is 4 lakh 20,000. Here, next is average profit. Average profit is equal to, so here total profit divided by number of weight. So total profit 4 lakh 20,000. So divided by 6. So 70,000. 70,000 is the average profit. Average profit. Next, we will calculate in the third step. In third step, that is calculation of. So step 3 will be. Okay. Step 3 will be, say, calculation of profit available to equity shareholders. Calculation of profit available to equity shareholders. So here, average profit. Average profit we have calculated rupees 70,000. Is 70,000. Then minus transfer to reserve. Transfer to reserve. So here it is given the problem 20%. So 20% of 70,000. So So it becomes 14,000. So balance is 56,000. 56,000 is the profit available to equity shareholders. Next one is fourth step, calculation of expected rate of earning. Expected rate of earning. I will also consider expected rate of dividend. So that is equal to profit available to equity shareholders. So divided by paid up equity share capital. Paid up equity share capital into 100. So here paid up value of equity share. Sorry, profit available is 56,000. So divided by paid up equity share capital 2 lakh into 100. So expected rate of earning is 28%. Then fifth step is calculation of value of equity share. So here that is equal to the real method paid up value of share into expected rate of earning of dividend divided by normal rate of return. So paid up value is 10 into expected rate of earnings 20. So NRR given for 10. So rupees 28 is the value of equity share under yield method. Now we'll come to the last stage. Okay, so that is sixth one. Sixth one is say fair value of equity share. Fair value of equity share. So this one I will consider. Sixth step. Fair value or calculation of fair value of equity share. So here under intrinsic value, you have calculated the value of equity share is rupees 25, and under yield method is rupees 28. So divided by 2. So 25 plus 28 divided by 2. Finally, so the value of share becomes 26.5. Okay. This is the conclusion. Okay. If you have any doubt, you can ask.